Did you know when you're looking for a trade entry, there's always 3 zones you can use? So to get our first zone, we look for the trend and we look for the breaker structure. We had high, low, higher, high. This means we had a breaker structure from this high, and when we candle close below it, and our protected low is down here. So where our last breaker structure was to the low, that is our first zone. Now we call this your swing point zone, okay? This is the overall zone where you should look for price to tap into and continue higher. But where exactly is when we look into our other 2 zones. We want to look for the last up to down move responsible for breaking structure, which we can see is this zone here. We call this our SNDR. This is the demand responsible for taking out this high. So this is a good POI. Now the third one is, where did this big bullish move start? You can see we had low, high, low. We started ripping to the upside. So the last move in the opposing direction in a downtrend was here. So we can then draw a zone from this high to this low. Call this one here our origin, okay? This is where the bullish origin started. So now we have 3 zones. We have our swing point zone, we have our SNDR, we have our origin. We can see all 3 of them have liquidity in this zone, liquidity in this zone, and we know they are strong because it has created a fair value gap here from the SNDR, and we've created a fair value gap here from the origin. This means I can 100% look to take a long in here, or I can 100% look to take a long in here. You see, if you're not using the right zones, it's going to be a terrible setup. If you're using the right ones like this, it's going to be a beautiful setup. So if you want my free setups rating guide, where you can tell the difference between good and bad setups, just comment the word guide and I'll send it over to you.